That's a very warm welcome. Thank you very much. I'm Florent, so co-founder of weGrow. Lived and worked for seven or eight markets between Singapore, Morocco, Finland, the UK, Germany, and so on, and launched many markets. But it's not about me today. It's about three very, very interesting perspectives that Ilan explained a little bit earlier on. So we have Roland from xClip, Barend from Harver, and Martjin from Endeit. And how about we now grow internationally and look back at their own international journeys, because I think, Martjin, you have also seen many journeys. So without any further ado, we will obviously cover all the aspects that you mentioned on the poll. But without any further ado, I would like to welcome the three speakers and maybe start with a quick intro. So let's start with Barend. Barend, maybe if you can explain who you are and what you've built so far at Harver, and then we'll go to Martjin and Roland.
Yeah, sure. So my name is Barend, typical Dutch name. I'm the founder and currently CEO of Harver. But my passion is the product itself. And what the product of Harver does is supporting large organizations that recruit at scale, so that hire tens or hundreds of thousands of people a year, basically automate their recruitment process. And talking about internationalization, we are currently active in the UK and the US, and we have a development office in Colombo, Sri Lanka.
Roland, go ahead.
Yeah, my name is Roland Schaber. I'm working in the internet industry since the end of the 1990s, first for a company called Lycos, which was a search engine before Google that existed. But then in 2008, I co-founded xClip, which was a video advertising platform connecting buyers and sellers of video advertising outside the YouTube system. We sold that. Endeit was an investor, a Series A investor in the company early on, and we sold this company in 2016 to RTL Group, Europe's largest broadcaster. And yeah, I stayed there for a couple of more years. I left the business 2019. Now managing partner of xClip Ventures, which is an investment vehicle of my co-founder at xClip. So we do angel investments, also start up some new companies, still in the area of marketing technology, and also consumer marketplaces, some blockchain projects. So that's what I'm doing currently.
Thank you, Martjin.
Yeah, thank you all for joining. My name is Martjin Hamann. I have a German name, but I was born in Holland. I've been working for 10 years at a company called Endemol, a media conglomerate from the Netherlands. In those days, responsible for the internationalization, which was mostly done by M&A. We acquired close to 50 companies, so it was like a machine. But we also did startups in countries, and that is where I was quite operationally involved in that strategy. And then since 2006, when we exited Endemol, we started a fund. So it's close to it's 14, 15 years ago. And now on the other side of the table, helping entrepreneurs in scaling internationally. And xClip was one of the earlier investments in our first fund in 2008, and a great company and a great team. And I'm really glad that Roland and I are still friends and see each other a lot.
Cool. Great, we did the intro. I will definitely encourage you to, whenever you have a question, to post it on the chat. Let's start with looking back at all those international journey. I want to ask two questions. What are you the most proud of? And also, what was the most challenging so far, and why? So let's start with you, Barend.
That's two questions. Where I'm most proud of when it comes to internationalization, and yes, what the challenges were, right?
And the most challenging so far.
So looking back, I think where we are most proud of is the team that we built. Like in many things when you do business, it's the team that makes the difference. And if you go to another country with another culture, in our case also different laws, different legal things where we have to comply with, then hiring good people is very hard. I think we will talk about that later on, especially when you look at salespeople, for example, but also critical for success. So I'm really proud of the senior leadership that we hired abroad. And I think if you look at struggles, the fact that you think you know it all because you do something in the Netherlands. In our case, because we were founded in Amsterdam, and then you basically discover that you completely have to reinvent the wheel. If you look at Harver, it's enterprise business, so it's longer sales processes. Yeah, and then you see that there is that wherever you go, there is a language issue, there is a cultural issue, there are legal issues, and you have to reinvent yourself. And that was sometimes fun, but challenging.
Okay, well, I think we'll go into the specifics a bit later. Roland?
Yeah, I'm most proud of the fact that xClip, 12 years after launch, is still growing and thriving company now as part of RTL Group, and is realizing the vision we had early on when we said we want to bring the advantages of digital advertising to the big TV screen, you know, of targeting, frequency capping, and so on. And that was a big vision at the time. I mean, digital in total was still much smaller than TV advertising, and especially online video was still very early days. YouTube had just started. Outside YouTube, it was very clumsy, different players like QuickTime and Flash, and nothing worked. So I think when we started the company, we got a lot of feedback saying, okay, why does it need a new company? Right? Isn't it that animated banners? Why do you need video advertising? And so it makes me proud to see that the company has grown and now, you know, serves billions of ads on connected televisions and OTT services as part of RTL. Also proud of the team. I think very many of the, take the first 30 employees we hired are still with the companies 12 years later. I think it's also a rare thing in our industry. So that makes me also very proud. I think the biggest challenge in going international, I think, is finding the right balance and focus. I think you probably just solved the most critical things in a startup in your home market. So you've assembled a team, you have product market fit, you're growing, and you don't want to lose that because that's very important. That's your profitability. At the same time, internationalization needs a lot of focus. You cannot do it half-heartedly, then it won't fail. And I think what Barend already mentioned is you think you figured it out and you want to roll it to other countries, and you need to be very humble and see, okay, there's a lot to learn still in other markets. I think that's also the challenge.
Mm-hmm. Martijn, from your perspective, what is the one thing that founders always underestimate in that journey, according to you?
Yeah, it sounds like the founders are underestimating things, but I think it's also the investors and the VCs. We are by nature entrepreneurs, and also VCs are by nature optimistic and opportunistic people, right? So, and that is also the danger of it, that you get too excited about a deal, too excited about going across the ocean, going to the US, going to big markets, especially for Dutch companies. We have a relatively small home market. We are quite fast in going international, and totally understandable, but it's really a big pitfall. And I think it's everyone's challenge, including the VCs, investors, and the founders, to remain a little bit systematic and remain a little bit rationalistic about the approach, and don't get too excited about the internationalization.
It's a very exciting topic, so it's a bit hard not to be excited. Okay, I want to go right into the topic. So let's see, look back. You've achieved a product market fit with Harver and xClip. I would like you to share with us, okay, which international markets did you pick up first? When did you decide to go? And why did you pick up those markets? And then my question, which is the number one question from the audience, is what was your approach looking at those markets, and did it work or not? And what did you learn? So let's start with Barend on that one.
Yeah, I think what Martijn just shared is like going international can also be a pitfall. And you know, what is the right moment to do so? I think the other side of the medal is that if you don't go, it's also a pitfall, because if you are in tech and if you're in SaaS, and in our case also in data, then scale is everything. If you don't, basically gain a certain part of the market fast enough, you're going to lose it in the end, because the US companies will come to Europe as well, and then maybe it's too late. I think when we looked at internationalization, and I think that's also different for each company, but we looked where are the clients that are in our sweet spot? And you can imagine that in our reality, it's about hiring a lot of people, and then where does that happen? in the US, there are bigger companies than in the Netherlands, of course. And also in the US, there are a lot of decision makers. So the headquarters of companies in different parts of the world, that could also be our client, but their headquarters or our big influencers are in the US. So that's why we decided to go to the US. And the approach is then, on one hand, you can try to strategize everything from the Netherlands, make a big plan and have a detailed approach on what am I going to do the next 12 months. On the other hand, I think we also just concluded that it's hard to predict what will happen because it is different. So one of the values in our organization is dare to jump. And that also relates to this topic. We just went there. And in our scenario, it was literally taking the most senior salesperson that we had at Harver. We bought him a jug of peanut butter because he would not be able to eat that for a while when he was not in Holland. And we put him on the plane and rented this horrible small WeWork in Manhattan and just start hitting the phone. And I think the timing for us, so why that was the right moment, is that we, from the Netherlands, landed our first big deals in the US. So we had a little footprint there that made us a little bit credible. And that would also support him basically in reaching out to other companies, being able to already say, we do business in the US, we have these amazing clients, and start your conversation. And in the end, what happened, it took longer, it cost more, but in the end we succeeded. So I think in the end it was the right call, but we had to build a plane while flying it over there.
And what was the key to succeed in one sentence?
Persuasion, just going on, just don't stop. I think there are pitfalls there and there are a lot of reasons to stop. And I think you have, if you talk about investors, you have to have the right, also financial backing, because it is expensive. And if something goes wrong, you should have the financial backing to try again. But then don't stop. Don't stop as long as you see the opportunity still there. There can also be various reasons not to pursue, but we believed it would work in the end, so we continued. And
this was without the funding, right?
Yeah, for us, it was a little bit catch-22. We also believe that because we thought the US market was huge for us. And we also really believe that if we didn't take the US, another company would basically overrule us in the Netherlands then. So that was one of the reasons why we were looking for a US investor. But we also thought, it's good for a US investor if the company is already also US based. So for us, it was a parallel track where we said, step one is landing a few flagship clients. Step two, be present. And be present was a WeWork office with one person. And then, basically take that whole storyline to also US investors and also Dutch investors, of course, and get the deal we were striving for.
Okay, clear. If you have questions, ask them on the chat. We'll answer them. Roland, from your perspective, you didn't go to the US as the first market, right?
No. So I think we launched in Germany March 2008, and then we grew very quickly, went cash flow positive very quickly, and then took money from Endeit already after I think we were 6 months old. So it was rather quick. We didn't need the money, but we took it on to go international. It worked so well in Germany, so we wanted to grow in Europe. But also was partly defensive, what was just mentioned, because we had a competitor in the US that we feared, of course, if they come, and they were about to launch UK, Germany, and other markets. So we wanted to start the race with them. Then, we came up with a plan to say, okay, look by market size, we go classical European journey, we go UK, France, Spain, Italy, probably in this order. But what we found out that for our business, because it was, the model is, it was a two-sided marketplace. So you need to build up demand and supply at the same time. You have a chicken and egg problem. It's not that we say just because we have a good business in Germany that you get local advertisers in France, right? That doesn't happen. So for us, it didn't work just, changing the landing page, doing some online marketing, or even sending one salesperson in the market and see what happens. So for us, every market meant a full team, a local entity, an office, let's say at least 5 to 6 people. That was, and at least 500,000 euro investment very early on. So
per market.
Yeah, per market. And at the time, probably still now, it was still a high touch business. So a lot of selling advertising to the branding clients over dinners and lunches. So what we found is that we need, the local country manager needs to be really strong and needs to be entrepreneur on their own. They need to get this product market fit every time new, right? It doesn't help that we've been so successful in Germany. And that meant we were approaching the market a bit more opportunistically. So whenever we found someone who said, okay, they can really get this off the ground, they have the right connections, they are keen enough, we entered these markets. So that meant that we entered some of the smaller markets probably earlier than others. So we had Italy, the Nordics. I know there were discussions in the board. Why do we go there? It's 4 countries, 4 languages, 4 currencies, so small. And ended up to be the most successful country after Germany. In the end, we also were in Russia. So it's probably a bit more, I think, opportunistic, market-driven approach, which worked for us. It was fast. It was cheaper than other approaches. But of course, it meant we left some white spaces. For example, France, we never really succeeded. So that you need to take into account if you take this approach.
Yeah.
And general in terms of approach, because we needed to spend so much time in every market, I think we had to decide early on to not lose traction in the whole market. To say, should the founders focus on the core market and the product? And then you need to hire someone senior to help you with growth and internationalization, who can hire the teams or work with someone like weGrow, get the experts involved, or do it the other way around. What we said is, because we have spoken to the early customers, we need to get this first, chicken egg solution. We need problem. We need to solve that. So we did the other way. We said the founders go international, and we promoted people from the local German team to run day-to-day in that business. Now, that also comes with some risk that you don't lose traction there, or your early customers, they want to see the founders. But that was a way that we went and really spent significant time in the different markets.
Okay. I want to continue on this. So obviously I had other questions about other topics, but how do you create quickly product market fit in your target market from your perspective, from both of you, to really then not just grab 1 or 2% market share, but really understand, capture most of the markets when you launch several markets at the same time?
Shall I start?
Yeah.
Yeah, I think, the word says, so product market fit. The first thing we did was looking at the product. Does it work in the other countries as well? And then, the obvious things are languages. Do you have the right languages in your platform? In the world of recruitment, especially in the US, diversity and inclusion is a big topic. Legal defensibility is a big topic. So you have to add parts around compliance in your platform that you wouldn't need in the Netherlands. So that's something you just have to adapt and learn as fast as possible. And I think for us, the way to learn was with customers, selling the product and learn the differences from the customers. For us, because we have a platform that solves really the same problem in different markets, the market approach in itself, of course, you have to localize everything, but the storyline of the company was basically the same. So there we didn't need to adapt a lot.
Okay, Martjin, as well, if you want to share your perspective from so many companies that you are helping as well.
Yeah, what Barend is saying is obviously the legislation or compliance product is very different per company, right? And what we, for example, in the Endemol days, it was like, it's the most unscalable product you could ever imagine, right? A television product is like super local actors, local host, local flavor. And by creating TV formats like The Voice or Big Brother, you basically had a product which is 99.9% all over the world, the same framework. And then you can adapt it to local markets with tiny little things. And that was basically the main success of that product. And nowadays with software licenses, we are used to that, but it is, and maybe Roland can also touch on it later with xClip, but it's also the beauty of the differences per country. That's also the beauty of Europe, right? Otherwise, the American companies would already taken over Europe if it was an easy way to enter. It's super difficult to go country by country by country.
Yeah,
and that's also the beauty of it.
So definitely, I think, Roland, you have a interesting story to share, or you enrich your value proposition based on the challenges that you face in different countries, in Spain, in Italy, and so on. Maybe can you elaborate on that?
Yeah, I think for us, it was finding product market fit. We didn't need to adapt the product as such, not even the language. That was the same, but it was finding the advertisers and the local publishers to work with the platform. And say the success depended a lot on the quality of the first, let's say, salespeople or country managers. What connections did they have? Did they manage to get the first test customers on the product? Because then the more demand you have, the more supply you can get. So I think that was a key success factor. Yeah, and in the markets where we didn't find the perfect candidate right away, or we're too late, then you have bad market timing. You have a competitor coming up. So it depended a lot on that fact. But yeah, we also had some advantages. If I mentioned that US competitor that came over at the same time, they didn't succeed at all in Europe, right? They took a classical approach, set up headquarters in London and wanted to serve the whole European market from there. Whereas we did the hard way of opening offices in every market, finding the local people, but who were very well connected in the advertising scene. So it took longer, but it helped us to really build a strong business where a lot of US companies in that space didn't manage to do it in Europe.
Mm-hmm. I want to take Martjin.
And there's also a premium paid for all the hard work. Like maybe for Harver it's different, maybe because you had all your clients, most new clients in the US, but most of the European entrepreneurs and European companies, they can create more premium value by land grabbing first Europe, right? Go to the Nordics, go to France, the UK, Germany, and then have a solid position there, which is a lot of work, but at least it's close by. And then a US buyer is paying a significant premium for that work. And we see that all the time happening. We have a lot of transatlantic exits. And it was mainly for that reason why the US acquirers looked at the European companies. And so that's a different approach, right? You can go US or Asia, or you can go first Europe, and there's not right or wrong.
No, I think it depends on the end game, because if you say like transatlantic exits, that means that you have become the runner-up, right? Because else you would have bought the American company. And what I sometimes think is, it's really hard for a US company to come to Europe and claim all the countries, but I think it's equally hard for me as a Dutch company. For me, the bridge to the UK and to the US, okay, it is a 6 hours flight, but that's the only downside of it. Compared to going to Germany, which is of course closer by, so I can go by car, but then the language, the culture, the legal, everything is completely different. While the US is a little bit the same. So I think that's the reason why we thought, well, if we claim the US, and then we can always go back to Europe. We can maybe, well, in the state we're entering now, start buying the runners up in Europe that didn't go to the US. So I agree with you. It's always different, and it's good to have the end game in mind when making those decisions.
Yes, indeed. I want to speak about the role of the investor here. And start with you, Barend and Roland. What was important in that choice? So you clearly decided to go to the States. So and how fast did this process, or how slow did this process go? So can you maybe share your perspective on this? And then afterwards, I would like to ask the perspective of Martjin, which is obviously very interesting.
Yeah. So we, in the end, of course, we talk to a lot of investors, and I think what makes it in the end successful is the relationship that you build together and the way you work together. And that's so hard to predict in advance. So the reasons, so I think that makes the relationship with us and our investor Inside very successful. The reasons why we choose Inside was that we wanted to have a US investor because we thought that would be the first market to really dominate, basically. And we also liked the straightforwardness from this investor, what we liked from Inside. And that you asked, how long did the process take? When I had my first call with them, and it was with somebody just doing research in the market, right? We all have those calls. I asked the guy, like, how long is this going to take? And he says, in 60 days, you will have the money in the bank, or there is no deal at all. So from this first, and it was the first discovery call, 60 days. And literally after that, it was 30 days of discovery, getting to the term sheet, then 30 days of legal compliance and DD. And in the end, it took 4 more days before the money was in the bank. And that was because we had our King's Day and Labor Day. And that was the reason why it took 4 days later. But that predictability, that on forehand explaining this is what process will look like, this is how we will operate, and that it all turned out to be exactly as they promised or predicted, that for me was really fruitful. But that last part is something you only discover along the way, obviously. That's not something you know on forehand. Another thing that was important for us is, and I also like that from Martijn, this looking ahead. So we also thought, this is Series A now, but it's only the entry point for what's coming next. And that's why we also wanted an investor that had deep pockets. And we consciously choose not to go for a smaller fund that could not do that themselves. So that was also an important part in our decision process.
Yeah, thanks. Roland, on your side?
Yeah, for us, it was very early in the process. After 4 months, actually, Endeit approached us. So we didn't actually talk to lots of investors. We had a couple of meetings with some German VCs at the time, but we really liked the Endeit proposition from the beginning. I mean, the team there, Martijn, Hubert, was their Endemol background. So they knew the TV industry. They've done all this internationalization, done M&A. So all the areas where we could need help, they covered. So I think we liked that from the beginning. And like Barend said, I think it's a lot about the relationship. I think what was important to us, it's not about the numbers, the valuation, or the details. You want to find out, do you have a good relationship with that person? And there we had a good feeling. So we started the discussion in August. We had a term sheet early on. It was 2008. And if you remember, September 15th, Lehman happened. So stock market going down 30%. We had a term sheet, but VCs were canceling out of term sheets all the time at that time. And I think what Barend just mentioned, you only find out later if that investor will really stick with you in ups and downs and crises. So we had a chance to find out before. And we saw that Endeit, they stick to all their commitments, all their promises. We closed the deal in November. And so we could already see that they will be a great partner, and they have been the full 10 years afterwards with all the ups and downs were there. So we were lucky to have a glimpse or have a signal of their quality even during the process. So that's great.
I like what Roland is saying about this valuation. There's always, on the coffee tables and with beers, like the valuation discussion. I think on the long run, the valuation of your Series A, it's in the moment when you choose your investor, the investor is so much more important than $1 million extra here or $1 million less there. I think that's a very valuable point.
Mm-hmm. There's a comment about the US. We will cover that in a few minutes. Martijn, I would like to ask your perspective. What do you expect from founders? And also, once you sign the deal, how do you get comfortable in the first weeks or the first months? How can they win your trust?
Yeah, well, since most of the investments we do and also in the past is very personal driven, so founder driven, person driven, and maybe less product driven initially, because people running the company are more scarce, and more hard to find than product. A lot of products are usually a little bit the same or similar-ish, but the team who needs to do it, the founders and the founder team, and in the case of xClip was Roland and Jean-Pierre together, our diligence was mostly on them, right? So it's about what is their background, are they serial entrepreneurs or not, how are they collecting, how are they making their own teams, and in a DD, in a due diligence, you can figure that out relatively quick by just having dinners, drinks, and talking to clients, talking to employees, suppliers. You can figure out a lot. We even use how you call it, psychological testing methods, where you can basically you have a testing module. Are the teams complementary or not? So you can do a lot. And then you define together a certain 100-day plan or a post-closing plan together. so you already work a lot together on, let's say, the new business plan or the new growth strategy. So to me, it's more like an operational project, where you learn each other along the way before you close the deal. And yeah, and I think in the example of the Lehman thing, the 2008 stress times, I think that was also interesting for us to see, okay, how are these guys doing? Are they pivoting, or are they cost cutting? Are they making smart, quick contracts to go to fight this potential crisis in 2009? So yeah, it's a due diligence along the way.
Mm-hmm. Okay. Since we're speaking about the crisis, interesting aspect in your story, both of you, Roland and Martjin. So obviously now we know all about the corona, but this is also a different context. So Roland, what happened there and how did you solve it? And then I would like to ask the same question to Barend, which you have quite some best practice to share on this one. So yeah, what happened on your side?
Yeah, of course, we were also quite scared at the time, because advertising was cut immediately. It's always easy for companies to cut advertising the first thing, and we were a really young company. But interestingly, we actually turned out to be one of the beneficiaries of this all. So we actually benefited from it, because the ad spend went down, people cut their TV budget, but video advertising was still so new, and of course we could prove the effectiveness with more data. Also the branding effect. So actually that we saw people who pulled TV advertising, shifted, small part of that was enough at that time, to digital video, so they didn't stop experimenting, because they thought it's so important that we kept a lot of the budgets. And more importantly, for the supply side that we had, so the publishers, the broadcasters, the content owners, they were in serious trouble. So their revenues were going down, but they needed to focus on their core business. So the TV companies were focusing on TV, and that small part, not even part of the revenue line yet, digital video, they were happy to outsource that. So we actually got calls and say, can you handle this for us? We have bigger problems. And we got a lot of inventory and the demand side. And I think from 2008 to 2009, we grew 400%. So in the end, there was a lot of, we were scared what might happen, a lot of plans, what we could do, crisis management, but like Amazon and Zoom this time, we were one of the winners.
I see. Barend, in March, just before we wanted to do our event, COVID-19 hit. Obviously, a lot of people froze the recruitments. How did you handle that as a team? Your salespeople in the States and so on. Can you tell us what happened and how did you solve that?
Yeah. Obviously, it also caught us a little bit by surprise. If you, in hindsight, if you look back, it's so obvious that it would happen. But indeed, in March, the reality really hit us. And yeah, I think what followed in the end, it turned out good for us. And I also think it was a really interesting time. So what we did, I think step one that we did was immediately budget and cash. How much cash is in the bank? What if we have a lot of clients also in the travel industry, Booking.com, KLM, what happens if they cannot pay the bills anymore? So get cash control, and also our own hiring, reduce it, just to make sure that you stabilize and that whatever will happen, that you have a very long runway to cover. I think the next step was the team and the clients. Is everything and was the team okay? Reaching out to them, just see if they're personally okay, but also to our clients. They have bigger problems than us, so connecting to them. And what I told the team is, this is not a moment that you're going to sell anything. So imagine it's April 2020 and you're going to call a client and let's talk about your recruitment strategy for 2021. It's nobody wants to talk about anything else than COVID. So don't sell anything. This is the moment where you can prove that you are there for them in a hard time and start supporting. So what we did is offering to companies where we knew they would be hit hard, give them contract freezes to also support them. And I know it will not say Booking.com if they don't pay us, but the signal can be huge. And we start offering important parts of our platform that could help companies right now offering that for free. So for example, part of a platform can see if somebody is capable to work from home, literally check their computer if it's capable of doing the application it needs to do. And we start giving that away for free. And yeah, we got a lot of goodwill from that. And actually the biggest clients we are landing in this quarter are the result of the introduction we got by giving stuff away back then. And the last thing that we did with the team is saying, okay, nobody can predict the future. In March, nobody could predict the future. But what we could do is define stages that the world would go through and define stages that therefore we would go through, that in the end probably would not result in everybody dying, because at some point we assumed everything would be okay again. And then, yeah, explain what happens in those stages. And that gave a lot of comfort to the team, that they know, okay, we don't have a full plan yet, but we have a plan for the next 2 months. And that is part of a bigger plan that will unfold as reality unfolds itself. Yeah, in the end, yeah, you mentioned Zoom, which is of course a very good example. Yeah, recruitment, unemployment is spiking, so companies need automation to process more unemployed applicants that are coming in. People are moving industries because hospitality is not existing anymore. And people need to do that with less money because companies are cutting budgets. So in the end, for Harver, it turned out, yeah, it sounds crazy, but pretty okay. Is we are growing pretty fast now. But that was not something, of course, we could know in March. That's something that unfolded along the way. Mm-hmm. I think right now, what any companies should do is that everybody's talking about getting back to normal again, right? So we all hope the vaccine will be there, and then maybe July, August, everything is normal. But I think that we should all realize that it's not going to be normal like January 2020. It's not going to be that normal. It will never be a complete new normal. Zoom will not disappear. Work from home will not disappear. So in our industry, labor and work, the fact that people will still be work from home, also if everything is back to normal, is important. And I think in each industry, there will be things that are then different than they were half a year ago. And if you look at your roadmap, for example, yeah, make sure that you address those needs, the needs that you can already see a little bit if you look through the fog towards the future. Mm. And that's the process we're in right now. So adjusting the product to, yeah, what we assume is going to be August 2021.
Okay, clear. Thanks, Martijn. From your, you have so many portfolio companies. What are the best practice you could share from your perspective on what happened, especially in B2B sales and international expansion?
In respect of a crisis, you mean, or?
Yeah, or anything that any examples that you've seen that worked out very well for companies that could be valuable for the audience?
Yeah, well, yeah, in crises like this, by the way, we had 3 crises over our 2 funds. So it's, you can just know for sure that it will happen every 5 years. For sure. We started in 2008 with the crisis of Lehman. And then we still thought, oh, that's a US thing. It's okay for Europe. No way. In 2011, so the liquidity crisis, cash crisis in 2008 helped us a lot in investing in 2009 and 10. The best returns we made were on our investments in 2009 and 10. Because when everything goes down and there's a liquidity crunch, that is where you should invest, right? That's just our job to invest also in down cycles and sell on high cycles. In 2011, there was a little window where the liquidity crisis or financial crisis was done, and that there was a momentum for exits. And that is also what you then really have to discuss with the founders. Okay, there is a momentum here, there's a window to do something. And then in 2011-12, just straight after the little momentum, there was the Euro crisis, which in my view, in my experience, my recalling, it was a pretty serious problem that if the Euro would fall, Greece and we had like, I remember that we had discussions whether the Deutschmark would come back. And the Euro would be gone. And I was, oh my God, if the portfolio is all in euros and we go back to local currencies and Europe is falling apart, what should we do? And then now we have the COVID thing. So it's on every 4 or 5 years, there will be things like this. And then I think it's good as a founder that you have a shareholder group or a board who stays calm and give you a little bit more money or help you with restructuring, or like what Barend was saying, you like focus just a little bit on the cash runway, but keep your team, the key people in your team, keep them close to you. And that is exactly what we do and what we do with our portfolio, without exceptions. In March, April, I was 24/7 busy with helping the portfolio. And then in June, July, we started to invest again.
I see. Okay, thanks for sharing that. I want to go into the question that you always ask about the US expansion and how expensive it is. So Martijn, Barend, Barend, how expensive was it for you? This, and Martijn, I guess you have also a couple of examples looking at companies that did not succeed, and I guess it was also pretty expensive in the States. And what are the key learnings from that?
I think you cannot really, you cannot allocate one number to it. We are an enterprise sales, so that means that one person can drive a deal. So you can start really small. But if you have a marketplace, yeah, you have to invest huge in marketing. So for us, it was pretty limited. But I think, yeah, you should really look at your own company, knowing that there is a lot of unknowns, but there are a lot of things that you can know and make your own budget for it. I don't think there is because setting up the company is a few dollars. I mean, that's not the issue, and flying there is also cheap. But yeah, what the business actually costs really depends on the model.
Martijn, from your view?
I think internationalization is not a goal in itself, right? Like M&A is not a goal in itself. It's like the beginning of the call. There must be a commercial reason for doing it. And if your own home market is too small, then either the definition of your addressable market could be too small as well, right? Is your product really durable enough, or are you working in a niche? And then M&A can help, or internationalization can help to look for an addressable market somewhere else, which works maybe easier for you. So it's hard to give a general answer, but in the experiences we had with the US, it was pretty terrible, pretty dramatic. It was like really, really horrible. And we also had to learn, like European, let's say German or Dutch companies going to the US, you are really, really 10-0 behind, right? So you are the last person they want to work with. You get the worst hires. If you are a talented sales guy in New York, you don't want to work for a Dutch company or a German company, you know? You're the third choice. So you need to pay these guys a lot, or women a lot, to get them to your company. So they're overpaid. The first hires are overpaid. It takes longer. They pick other losers. So you now have a group of losers in New York, and it becomes super expensive. And you could actually create a failure of your own company, the continuity. The VCs are getting a bit nervous because you're burning money like hell, and then you have to start all over again. So, and I also had to learn that painfully. But the not invented here syndrome is a lot in the US. German, Dutch companies, French companies are, in American views, typically not the good products. Anyway, so what I always remind myself is, assume you need twice the money, assume you need twice the time period you think, and assume you will churn your first hire. But and that is how I operate now. But I also have really successful stories over time. For example, make sure that the founder is heavily involved in the US expansion strategy, heavily involved. Maybe even go there for a year. But Roland, you know better.
Yeah, I mean, for us, again, it was case we could not just send a salesperson there, a small sales, so we needed a full organization. So, and also when we went to the US, I think we as founders were reluctant a little bit. At the beginning, we saw it's big. There was a lot of competition. I think we were pushed a little bit by the board, not Martijn, but there was someone else on the board who said, I can help you there, and you need to do that. That's how you become $1 billion company. which is probably right? If you do it in the US, I mean, in our industry, it's the trade desk made it and look at the evaluation. But so we're pushing a little bit, and we spend, I think, 6 times the money we spent in a European market to get there. With this, the money we reserved, and it didn't work. It's just too much competition, and we had all the problems that Martjin just mentioned. So the first hires were not good enough. Fly there again, spend a couple of weeks, try to rebuild the team, and then again, if you do US as the full industry, if you're not enough with one salesperson doing remote sales, I mean, just putting someone in New York doesn't help you in the US, right? It's a huge market. It's like continent. So we had to then office in the West Coast as well. And again, so we spent 6 times the money that we needed to succeed in the European market. And it was still not enough. So you need definitely deep pockets if you say you need to build up a marketplace with a full organization locally. Might be different if you just can test the waters with one sales guy or even a freelance sales guy, get customer feedback and grow from there.
Yeah.
Different
I
story.
agree with Martjin on that, by the way. So Martjin is absolutely right. People are twice as expensive in New York. You have to completely change, let everything go, about salaries, because it's all insane there. And he's also right, it's really hard to get good people on board. On the other hand, if you're convinced about your company, go there yourself and convince the salespeople that you are a good place to work and that you can make insane amounts of money because you work for this Dutch or German company. What we also did is, if we reach out to customers, back then, if you looked at our website, you would assume that we were a US company. So only further down the line, they would discover that we were not an American company. Because the not invented here syndrome is also something to take into account indeed.
And Barend, you shared with me, I've also experience with hiring super great sales people from the States, which, they all claim that they are amazing and so on. And some of them are, of course. But how do you cut through what is real and what is not? How do you, can detect who's going to succeed and who's not going to succeed? Of course, you can use tools like Harver, but can you share what you are doing personally with those people?
Yeah. So hiring in the US, what Martjin just says, assume that the first person will go. No, not only the first one, many of them will go. And sales is obviously important, one of the first hires. And what you will find is that in a job interview, US salespeople, they're all smashing their targets, killing it, were the best performer. Like they can sell themselves so amazingly. And I think that's, Dutch people, we are not used to that. So the first time you really think, wow, we got him. I think what we learned is that they do this on autopilot. What I discovered in the US market, if you do job interviews there, the first hour is autopilot. Just have the conversation, ignore everything what they're saying. But then if you continue and you ask them to come over to the office for 4 hours, then after 2.5 hours, something will break. Because then they cannot run on autopilot, they will have to improvise. They will really have to go deep in the topic, where on shadow level, they say all the right things. But then if you go deep, and that's when you discover what the true potential is. And then you still have a shitload of mishires. But for us, it helped to also find some really, really good people.
Great.
And we do need to end, Florent. Is there any last minute or last closing words or anything you want to add to this?
I wanted to ask for your, if there's 1 or 2 tips that you can give looking at your journey to the audience, what would that be?
If I know that Martjin is maybe not going to like it, but just do it, go for it. There are 1,000 reasons not to go. It's so much fun. You also personally learn so much. And if you succeed, then the reward is also so big. And if it's not US, if it's Europe, at least go. If you have a tech company, don't stay in the Netherlands. Explore.
Yeah, I would say the same. Our home markets are all too small in Europe. So you need to look into internationalization. Do it only when you really have product market fit in your home market, when you're flying there. Second, make sure your home market keeps flying. Don't lose track. That's what you don't want to do. I think make a decision. Are you the one as the founder driving this process, or do you hire someone for that? If you are the one, then make sure day-to-day is covered by strong management. Try to find local people who've done it before, who've started a company there, who've grown it. There are local entrepreneurs who are looking for, a European company they can be part of. That will help. And yeah, I think make sure you're well funded before you're international, because it will take longer and there will be more bumps on the road compared to the success you just had in your home market.
Yeah, I would say I'm also a big fan of US, so don't get me wrong, Barend, but I would say see it as a product development project. Don't be stupid, be systematic, and prepare yourself. What are the specific milestones and goals I want to achieve? And if you fail on all those milestones after a while, you should also really ask yourself, do I still do the same? Do I still do the right thing here? So you have to be, in my view, go all in, but be systematic. Be systematic about it. And what I also would advise, consider to do a US VC together with your European VC. Because the European VC, like Endeit, can really help you to a certain extent, and also help you on your home markets and helping you preparing the US strategy. But to have a US co-investor there is really, really helpful. And that is how we do it now with our portfolio companies. Really someone on the ground, someone with a local network, I think is a big plus to me.
All right. Thank you so much. And big applause to Florent, Barend, Martjin, and Roland. Thank you so much.